All right. Good evening, everybody, or should I say good afternoon? I should say good afternoon, everybody, and thank you so much, MarketFest, for having me on board and being able to share my insight and my knowledge as to the markets to you guys. Good evening. So if you guys can hear me correctly or hear me well, I just want to make sure that you guys can hear me. Just go ahead and type in a Y just so I can see that. Also, that will help me to know that I can communicate and you guys can communicate back to me. Very good. Thank you, guys. Thank you. It's nice to see you guys. All right. Perfect. Okay. All right. So let's get started. A little bit about myself. If any one of you guys have never heard me speak before, my name is Wally Olopade. Again, like he said, I founded Right Side Trading. And the reason why I called it Right Side Trading was because if any of you guys have ever traded for a while, like I did when I was learning how to trade, one of the biggest frustrations that I had personally was the fact that whenever I would look at people talk about a stock, it was always in hindsight. And it just really, really frustrated me to no ends. If you've ever been frustrated with that, you probably understand what I mean by that, okay? And so, they'll look at a chart and say, hey, I can show you like, they say, oh yeah, see, you should have got in over here and stayed in until you got over here. This would have showed you when you needed to get out, and you could have got out and made a little bit of profit here. A good entry would have been right over here, and you should have got out over here and start shorting the market. If you're shorting the market right there, and it's so funny how they always pick the exact same top. It's like if you got out, if you shorted the market right there, look at how much money you would have made. You would have made all this money right here. And I was like, wow, when I first started as a novice trader, I was like, wow, that's amazing, that's amazing. But then when I had to go in and actually trade live, the problem was I didn't see what the market was going to do in the future. So it would be like what we're looking at right now, okay, right here, and it's saying, what should we do? Should I be buying long on this stock or should I be shorting this stock? That will be the question, okay? And that's why I named it Right Side, because when you look at the chart, oh, I didn't see the last presentation, Brandon. If you look at the if you look at the right-hand side of the chart, that's where we make our money, okay? Everything on the left, this is all the left. Everything you see right now is literally the left side of the chart, okay? And so, anybody can, again, hindsight is always 20/20. I call that hindsight trading. But if you were to look at this chart, and let me just do an exercise with you guys real quick. If you were to look at this chart right now, how many of you guys would say this stock is ready to go up? How many of you guys would say this stock is ready to go down? Now, I know you guys know this stock, USO, but, don't try to cheat. Just looking at the chart, okay? Because in real life, you would not know what it's trying to do, or at least you would be in real time. If you were to look at this and this was real time, what would you say this chart is ready to do? Go up or down? Okay, anybody? All right, so I have some people said up. Most people are saying up. Very good. Most people are saying up. Very good. Okay. All right, I had a few people that are saying down. And it says, why are your candles the same color? My candles are not the same color. Okay, all these right here are red candles. Okay, all these right here, red candles, and this is a green candle right here. So let me see, maybe I can change this just so that you can see it a little bit better. It might be the setting that you have your computer on. Let me see if I can change that real quick. Let's go to the appearance on this. And what we're going to do is we'll change this to a lighter green. Maybe that would help. Does that help a little bit? Dane, does that help a little bit? Okay, good. Perfect. All right, so we have the red candles that are going down and we have this green candle that is going up now, all right? And so the question is, how do we prepare ourselves? Right side trading will kind of help you to say, okay, you know what? Yes, we know all the stuff that took place right here, and that was my frustration, I have to say, but now the question is, what do we think is going to happen, or what do we see is about to happen on the right side? Because this is where we're going to start making our money. Okay, so what I'm going to do is I'm going to fast forward a little bit, and I want you guys to see, all of you guys who said it was going to go up, let's see whether you were right. Okay, and all of you guys who said it was going to go down, let's see whether you were right. Okay, and so what we have is a stock that actually went down. Okay, the question is, what could have told us that this stock was not ready to go up, even though when we go back over here, it was showing signs that it was ready to go up. And that's kind of like what I want to talk to you guys about today. Because when I was able to finally discover how to see that, I mean, it changed the way I traded forever, okay? Like they mentioned earlier in my introduction, because of this, I was able to see the global market correction that took place in 2015. When gold stocks started rallying in 2016, I was able to catch it in on the bottom. And a lot of notable stocks, being able to get in at the bottom of those stocks, I was able to do so all because, I've honed in the skills of learning how to trade on the right side of the chart rather than on the left side of the chart, okay? So I'm not a former floor trader. I don't have no background in any of that kind of stuff, so I'm not going to impress you with like, oh yeah, I've been around the industry forever. I've only been trading the stock market for 3 years, but it was a lot of time just spent behind the charts trying to understand how to see charts. And I know a lot of people might tell you, oh, you need fundamental analysis and all this kind of stuff, but I'm here to say that honestly, if you know how to read the charts the right way, you do not need anything else, okay? You really do not need anything else. And so that's kind of like what I did, and I will show you some things here today. So what are we going to cover today? What I'm going to cover today is exactly how to tell whether we're in a bear market or a bull market, okay? And the reason why I'm saying that is because I get a lot of people right now, and just even today, I was talking to somebody, and they were mentioning how like, oh, the sentiment of the market is so negative, this is an election year, so the market is going to drop, and there's all these opinions about the market, and I say, what is the chart saying? Okay, disregard everything the market is saying. What is the chart saying? All right, and disregard all the news. What is the chart saying? You have to be able to read what the chart is saying. Okay, and if you know how to do that, you would do well. Okay, so what we're going to cover is how to see stocks that are beginning to become bullish, all right, as well as stocks that are beginning to become bearish. And what I would not cover is exactly when to exit that trade, okay? I'll talk about how to spot them. Won't necessarily go too much into how to, enter the trade itself, all right? But I would talk about how you can spot them, and we'll go from there, all right? So of course we all see this, and now this is where USO is right now. So I had a gentleman that came up to me, and he was in, I think, USO from the time that it was up here, okay, right around this area right here, and he's like, oh my gosh, I've lost so much, my wife will kill me, this and this and that. And I said, why are you in this stock? He said, what I want, I'm hoping that it rebounds, is what he said. And I said, those are curse words, in my opinion, when it comes to trading. All right, there are some words that we consider curse words that you have to be aware of. And some of those curse words, I would just say right now, is anytime I hear somebody say, I hope the stock will reverse, I know that they don't know how to read a chart, and to me that's a curse word. When I hear people say, I have a feeling that the stock is going to do this, again, I know this is an emotional trader and not a professional, doesn't know how to read a chart. When I hear people say, I pray that the stock does this, I can tell that they are definitely not well versed in reading charts. If they say, I heard that this stock is going to do something and this and that, and I say, unless you're getting insider information, which is illegal, you really don't know how to read the charts. If I hear people say, I read about this stock and how it's going to do this, I said, okay, this is another person that doesn't understand how to read stocks. So the curse words again, feel, heard, think, hope, wish, pray, stuff like that, read or heard, are all curse words in my opinion, okay? It tells me that you really don't know how to read a chart, all right, which is a very dangerous thing. So if you can't use those words, I wish this stock will do this, I hope this will, I pray this stock will do this, I feel that this stock is going to do this, well, what type of words are you able to use, okay? And words that I tell all my students is this. I say, you should be able to see what the chart is doing. You should know what to expect from what you see. And then you need to be able to expect the stock to do so. And if it doesn't do so, you know exactly what to do, which is to get out, okay? So we see it, we know what it's showing us, because if we don't know what it's showing us, we do not trade it at all. and then we trade it based on the expectation of what we see and know about that chart, okay? And that's pretty much what it is. See, know, expect. That's the 3 words that we're allowed to use, okay? So again, going back to this friend of mine that was telling me about this stock, I said, I don't know any reason why you would want to be in this stock right now. I said, USO, as much as everybody might want to say anything on TV or in the newspaper or anywhere else, this is not a stock that is ready to go up yet. And so how do you know this? I was like, well, I'll show you how you can tell very easily whether this stock is a bullish stock or a bearish stock. So how many people believe that this stock is a bullish stock? How many people believe that this stock is a bearish stock? Okay, just go ahead and answer that. If you think it's a bullish stock, let me know. And I appreciate those who say they don't know. I appreciate you saying that. At least you're being honest with yourself. Okay, very good. So a lot of people are saying bearish stocks so far. Very good. So one person said they see consolidation. Very good. Okay, very good. All right. So if I'm looking at this stock, I would say that this stock is bearish. Okay, and I'm going to show you very clearly why I see this as a bearish stock. Okay, I want it to be something where it's very logical. You take away all the emotions, and you can just look at it and you say, this is a bearish stock, or this is the beginning of a bullish stock. Okay, so I'm going to leave it for now, and I want to go to another example, because I think it's good when people practice and see stuff. I'm going to show you the answer to this really soon, but before we do so, let me take you to another stock real quick, and I want you guys to tell me, what do you see on this stock? Okay, oops, wrong one. Let's see here. Yep, wrong one. Let's see. Okay, all right. Do me a favor, close your eyes. Don't look at this stock because I want to show you something. I thought I had this exactly where I needed it to be, but it's not. All right, so close your eyes. Don't look at this stock. Don't cheat, okay? Don't cheat. And I want you to, okay, now you guys can open your eyes, all right? And I want you to tell me, what do you see this stock ready to do? What do you see this stock ready to do? Okay? Same exact setup, all right? But now we're going to talk about what is the difference between the two. Same exact setup. So most of you guys are saying it's going to reverse, just like we thought it was going to reverse on the other stock, all right? Probably rise again. We see a hammer, very good. Some of you guys know your candlestick signals, very good. Very, very good. By the way, I do not trade without candlesticks, okay? How people trade without candlesticks, I have no clue, okay? Candlesticks, to me, is very, very important when it comes to trading the stock market, okay? All right, so we see all this, all right? And so a lot of people are saying that it's going to go up, and what we end up having is a stock that actually did go up. So what is the difference between this stock, Chipotle, and why it went up, as opposed to USO and why it went down? Let me start by showing you this. It's a very simple indicator. I know some people say I don't believe in indicators and all that kind of stuff. That's fine, okay? But I have to tell you, these have changed the way I've traded tremendously. So I'm going to go ahead and show you the one indicator, which I call the secret, okay, to understanding whether a market is bullish or bearish, okay? The first thing you have to realize is too many people, and I used to be one of those people too. I started off with futures trading, day trading, and I blew my account more than twice, okay? I lost everything in my futures account, okay? Then I went to day trading options, did the same thing too, blew my account another 2 more times, all right? And it wasn't until I started, getting away from like the minute, I'm saying the 5 minute, 10 minute, 15 minute trades, and started looking at a bigger picture that I started really changing the way I look. Okay, so I agree with you, Daniel. I lost everything in futures. Okay, and so not that I'm saying you can't make money off of futures, but the thing that I realized for myself was the fact that me having to make quick decisions was affecting the way I traded, okay? What do I mean by that? When I was on a 5 minute chart, I had to make the decision so quickly, or else I was always in constant fear that I was gonna miss out on that trade, okay? So it never really gave me enough time to really sit down, really analyze it the way I truly wanted to analyze it, or at the same time, give me time to really see how the stock was playing out, to see whether or not it was really doing what it needed to do, okay? And so by the time I jumped in, I mean, within 2-3 minutes, it's either I was losing money or I was making money, and that 2-3 minutes really made me stop panicking, and it was just way too quick. You're absolutely right. It was way too quick for me, and it just made me, again, it was just emotional trading over and over and over again. I just couldn't handle it. I had to get out, okay? And that was for me, okay? But when I switched to like more of a swing and long-term trading perspective and really started researching, what it did was it allowed me to take my time. I mean, I don't look at the market every single day at all anymore, okay? The most I look at the market is at the end of the week, okay? And especially the first week of the month, that's my busy. So right now, you guys are lucky. You're in luck, actually, because right now is when I'm actually starting to do most of my work for the month of November. After this week is over, I really don't have to worry about anything else, okay? It's just a matter of entering certain stocks, and that's pretty much it. And by the way, I only trade stocks now, okay? I don't trade options. I don't trade futures. I don't trade Forex. I only trade stocks because it's more of a longer time frame, okay, for me. All right, so that being said, where was I? I just lost my train of thought. Oh, wait, anyways, so we're looking at this chart, and I really lost my train of thought. Okay, please forgive me, guys. I totally lost my train of thought on this one. I segued, and now I can't remember. Daily was it? I was talking about the daily chart. Okay, yes, thank you. All right, so one of the first things I do is I like to see the big picture. Thank you so much. So I was going to use an indicator, but this indicator, I only really use it on a bigger time frame, okay? And remember, I'm telling you guys the secret of identifying whether a stock is bullish or bearish, okay? And so I go always to the monthly chart. This indicator I use is on the monthly chart, and it's a very simple indicator. Some of you guys might even know it. I've seen people that have already heard about it and saw it but don't believe in it, okay? So my goal today is to reemphasize that if you've heard it before, and if you haven't, introduce you to this indicator, and then hopefully drill it in your head to help you to see, because seeing is believing, help you to see how accurate this indicator is, okay? So the first thing we have to do is we have to go to the big picture, the monthly chart, to kind of see where is this stock going big time, okay? And once we do that, we add one simple indicator, all right? And that indicator is the 10 exponential, okay? Not the 10 simple. Most people go to the 10 simple, the 10 exponential moving average, okay? That's the that's the indicator that we use. So now let's go back to this same stock that I was just talking to you guys about. Okay, once we put that in, it's a very simple rule. Whenever the stock closes above the 10 simple moving average, we want to buy. When it's below it, we want to stay away. Okay, all right. And I do this on even the market itself. Right now, a lot of people ask me, is this? Oh, I'm sorry. We have the 13. I'm sorry, the 10. Don't look at the 13. It's a 10. Sorry. Okay, there you go. Thank you, Lee, for pointing that out. The 10 simple moving average, okay? The 10 simple moving average, very simple indicator. If it's above the 10 simple moving average on the monthly chart, don't do it on a minute chart, don't do it on a 5-minute, don't do it on a 10-minute, don't do it on a daily, do not do it on a weekly, okay? If you really want to understand, is this stock in the beginning phases of a bullish trend or in the beginning phases of a bearish trend, what you want to do is go to the 10 exponential moving average on the monthly chart, okay? From there, once you see that the stock closes above it, that's kind of telling you, get ready, this stock is probably in the beginning phases of it going up, okay? And what you predominantly want to see is a stock that has been going in a downtrend for a while, and then now is beginning to come up. So if I was looking at this and I can almost guarantee, if you went back to whenever this month was, December of 2008, okay, everybody probably would have been talking about, oh, wow, how it had a great month. This is the stock to be in. This is the stock to be in. And I'm saying, not quite yet, okay? Not quite yet. I want convincing proof. Remember what I said, there's no feelings, there's no hoping, there's no wishing. It's like we see it, we know it, and we expect it, okay? What I see right now when I look at this chart is a chart that looks like it's trying to go up, but it's not ready yet, okay? Why is it not ready? Because it could not close above the 10 simple moving exponential moving average, okay? So what ends up happening is the next month you saved yourself from all that headache right there, okay? And then a month after that, you saved yourself from all that headache. The month after that, now for the first time in a very long time, okay, we talking about almost 14 months, a year and 2 months later, for the first time in a year and 2 months later, now the stock is beginning to close above that 10 exponential moving average. This, ladies and gentlemen, is how you can tell when the bear market is over and the bull market is going. So somebody asked a question, is this approach ever wrong? Yes and no, okay? There are times when the stock is getting ready. Think about it this way. Investors, the trading is all about psychology. It's human beings that are trading this thing, okay? And even if they have machines trading it, okay, it's humans that program this, okay? Can they change their decisions at any point in time? Absolutely, for whatever reason, okay? We've seen companies that decided to do a merger, and then, you know, after 15 months of negotiating, they decide, hey, we don't want to do this anymore, okay? So at any point in time, investors, and we're talking about the big institutions, can change their mind. They might decide, hey, I want to jump into this market, and then they decide, hey, I don't want to jump into this market, okay? So you are going to see some of those like that, and this is where, remember what I said, my thing today is to show you the possibility of what this can do, all right? When towards the end, when I offer what I'm going to offer today, if you sign up with us, I will teach you and show you guys, just like I show my students, how to tell the good ones from the bad ones, okay? But I'm not going to go over that today, all right? I just want to show you guys the possibility of what can happen, all right? So another question was, what's the win-loss ratio on this trade, okay? If you apply the steps and the teachings that I apply and the rules that I put together for this, okay, you will have a 90% chance of this stock's doing well, okay? I can tell you that you will see very clearly. I mean, this is just one indicator that I showed you guys, okay? We haven't even factored in candlestick analysis. So don't let me mislead you guys, and I don't want to mislead anybody. I'm not saying that this is the only thing you'll need and it will change the way you trade forever. It's just one out of many, okay? The whole idea is, think about it this way. If you were to fix a car, okay, and let's say you had battery problems, all right? And let's say now your battery is down. What tool would you use to fix that car, okay? Most people would bring out jumper cables, but it's just one tool. Now, if your radiator goes out and you say, well, the jumper cables help get my car started, so let me use the jumper cables on my radiator, what kind of results would you get? Absolutely no results, okay? So does it mean that the jumper cable doesn't work? No. It depends on how you apply it. So I look at the market as a skill set. It has various tools that you have to use, okay? And that was another thing that I discovered, because I would go to one person's class, they'll say, oh, wait, we use Fibonacci, okay? And then I go use Fibonacci, and it works really well with the one they told me, but if I apply to something else, it's like I'm losing so much money. And I was like, well, wait a second, you showed it to me, how come I can't make money off of it? And what I realized is that each tool has to be used differently. There are certain rules and criteria that you have to use pertaining to the type of stocks and the type of trade and what's going on. So as the craftsman, you need to know what to use to chisel out the money that you need to make out of this market. No different from a sculptor. A sculptor has to have different tools to sculpt a masterpiece, okay? But if he's using one tool, could he use one tool and try to create something? Yes. But once you know the different type of tools to use, you can make magic happen. And that's what it comes down to. So I don't want to mislead anybody and say, oh, this is the only thing. Because I've seen people say, oh, I created this one indicator and is a holy grail to doing everything. No, it's not. Okay? All right? The way we break down our courses is we have everything from candlestick signals to patterns and to indicators. Okay? And what you learn is different indicators apply at different times. So the key is knowing when to use whichever indicator. So thank you so much, Daniel, for that. All right. So again, all I'm trying to do today is show you guys that it is possible to see the bottom and the reversal, the beginning phase of a reversal of a chart. Okay. And that's kind of like what I'm trying to show you guys here. So we see this stock right here. Knowing what I know now, I see stuff like this, I go in and I look at some of the other stuff that I look at to make sure that everything is on point. I'm saying, let me just even give you an example. Let's just say you didn't even know any of this other stuff and let's just say, you just went strictly by this, okay? So for the person that asked the question, what's the win-loss ratio on this, okay? Imagine if you got in when this happened right here, okay? All right. How long would you have been in that trade? Okay, you would have been in that trade, and mind you, I'm not the kind of guy that says you got in down here and you got out at the very top right here, because you see a lot of people say that too. No, that's misleading. Okay, we would have got in somewhere up here. Okay, this is where, because I wait to the end of the month, and I would have got out somewhere out here where it entered right there. So you mean to tell me, Wally, you would have lost all this right here? Okay, if I was just using just this indicator, yes. Okay, but even if that was the case, all right, would this have been a good return on your money? Okay, same thing right here. Now let's say we got in over here. Okay, we got in on this month. The very next month, boop, it took us out. Okay, well, guess what? That's okay. I would rather get out of this trade now than be like my friend who's still in, hoping and wishing and praying that this stock is going to reverse almost a year later. And every single month he's losing more and losing more and losing more. And his whole thing is, I definitely can't get out now. I definitely can't get out now. I would have taken my small loss right there, because guess what? It closed right back underneath that. And it's like, you know what? That's it. And look at what you would have saved yourself from just by following that. Okay? So yes, even if, say, you entered right there and you got out right there and you took a loss, great. And this is also the reason why I went back into stocks, because when you look at this and you look at that loss, we're talking about a 15% loss on that stock. Okay? If you were trading options, you can kiss that option goodbye, depending on, saying how volatility worked, okay? But at the end of the day, even that kind of helps you to say, should I be in this trade? Should I not be in this trade? Can anybody look at this and say, it's above it. Should I be in this trade or not? It should be very clear that, yep, I should be in this trade, okay? Just based on this, okay? When you learn all the stuff, you will see whether it tells you to get in or not. But by here, is there any question in anybody's mind whether or not you should be in this trade? Okay? It shouldn't be. It really, really should not be. And when we were showing this right here, when the stock was doing this, and everybody's trying to jump in because they have a feeling that Chipotle is going to go up, whether it may be because of earnings and, everybody's talking about it and they say, hey, it's time to get into Chipotle, I'm saying, no, it's not. Well, Wally, everybody's jumping into Chipotle. Let them jump into Chipotle. I'm not. Well, why not? Because the chart is not telling me it's time to get in yet. Okay? That's all it is. The chart is not telling me it's time to get in. Okay? Well, you're going to miss out, Wally. Yeah, I'm going to miss out on losing all that. Okay? And wasting all this valuable time. Oh, now I'm ready to get in and then see what happens. Okay? We stay in that stock as long as it stays above it. Notice how right here, it came really close. All right? Now, intra-month, I don't care about intra-month. Okay, intra-month it went below it, but what happened? By the end of the month, it was right back above it again. And so as long as it's not below it, we do not exit the trade. And look at what happens. Look at how long you would have been in this trade when everybody else is panicking and wondering and going on TV and trying to find out who has what and trying to understand who's going to tell you what. Should I get it? I know people that have gone into trades, and as soon as they make 5-10%, they get out of trade because they don't know whether they should stay in or not. They don't want to lose their profit. And I'm saying, don't be afraid. All right? It's slow. I mean, guys, it really slows things down. Okay? And when I say I only trade like, I don't have to trade every single day. I could have been in this stock back here in March, and for a whole year, I literally only look at this stock once a month. That's it. All right? There's some trade management that we have that we put in there that makes it, where you can automatically get stopped out if you feel like you're gonna if you have a certain percentage that you don't want to lose after you made certain profits, but that's a totally different topic. How to manage your trade, that's totally different. What I want to point out is, was this what I said at the beginning, how to tell the beginning of a bull and bearish market? Was this not the beginning of a bull market? Yes or no? Yes, it was. Okay, and now you're able to see that with one very simple indicator. Okay, question came out. So your students make a consistent income monthly, okay? Yes, they do, all right? I can show you some of my students that were like, and I have students that are, and I'm not trying to like disrespect anybody, but I have students that barely speak English, and I have students that are in their 60s, in their 70s, okay, who were losing money left and right, following every other courses that is out there. And once they started seeing the way, I had to change their mindset. I had to change them from like all this daily stuff. You know, one student was like, but I need money right now. And I said, look, if you're so desperate for money right now, you are bound to make mistakes, because how do I know that? I did the same thing too, okay? It wasn't until I started relaxing and say, hey, you know what? Let me let this trade work itself out. And then when you get to the point where you start having trades that are like every month, you pick the best of the best stocks every month, okay? Give it about 2-3 months. After that, it's like money is just coming in on a monthly basis. And so I told one of my students, I said, look, you know, if you need money so bad, then you need to go find another job. You need to go do something else, okay? If you cannot wait to let, you know, these stocks prove themselves 2 months from now, 3 months from now, 4 months from now, and you don't know how to survive between now and 4 months from now, it's like you need to go find something else to do, okay? But if you start the process the right way now, okay, and you start building, some stocks are going to go up in the first month. I'll show you some of those stocks that did that. Some stocks are going to go up, you know, 2 months later. Some stocks are going to go up 3 months later, okay? But once you have a system where now you're finding all the stocks and you are in the beginning, keep that in mind, the beginning of a bullish rally, it's just a matter of time. Just be patient. Just be patient, okay? Let me answer some few questions right here. Better off robbing a bank versus trading. I like that, Brandon. I wouldn't necessarily condone robbing a bank, but I understand where you're coming from as far as that is concerned, okay? You know, I don't like talking about other people as far as like, you know, I hear a lot of people say, you know, when I was in real estate, oh, yeah, you know, if you want to make money like Warren Buffett did, or Donald Trump, or if you want to make money like Warren Buffett in trading, this is the type of system they use. And I was like, no, I want to tell you what I've done. Not what Warren Buffett has done, not what Paul Tudor Jones did. I don't want to tell you what all these other guys did. I want to show you what I did, because again, I didn't have any, like 3 years ago, I kid you not, I didn't know what a bull was from a bear, okay? And now I've been able to look at these charts and go, and it's honest truth. Like, I'm not here to sell you any fluff. You either like what I'm talking about or you don't like what I'm talking about, is what it's really going to come down to. But I can guarantee everybody that has ever walked away is not, oh, this takes too long, I want quick money. They always come back and say, you know what, maybe I should start learning it the way you're talking about, okay? All right, so another question came in and says, do you recommend using leaps for these longer term trades? Yes, absolutely. Keep in mind, okay, you want to make sure that the spreads are not too big, okay? You want to make sure, you know, the deltas that you get in, there's a way to look at it so that way you're not hurting yourself with delta, because the issue with, you know, with leaps is, or options, period, is the fact that, you know, you have time decay, okay? Because if this stock, you know, I mean, think about it. If you got into this trade right here, this was April, all right? Stock went up, came back down. By October, it was pretty much at the same level that it was at, okay? So options would have eaten up some of that profit from you, okay? So you have to keep that in mind. So that's something, and this is why I switched to stocks rather than just options, okay? Now, of course, you would have made some of that back, but what if it didn't, okay? What if it didn't, all right? When I first started, I was using a lot of leaps, and what ended up happening was the fact that, you know, hey, 4 or 5 months passes by, and options are just getting killed, especially if there's a lot of volatility and all that kind of stuff. Whereas with stocks, you do not have to worry about that, okay? And some people like using margins, some people don't. I use margins, so I use my margins to kind of give me that leverage that I would have got from options and be on the safe side and not have to worry about expiration, time decay, and volatility that you have to deal with when it comes to option. Okay, so would this work on futures? To be honest, I don't know. I haven't looked at futures on this. I literally only look at stocks. And here's the reason why I switched from futures to stocks, just so you guys have an idea. The reason why I switched from futures to stocks was because with stocks, I can, like right now, like I said, you guys are in, you know, like this week is a week where I do my scans. So I did my scans on Monday night, okay? And I had about almost 380 stocks that came up on my list, okay? that are meeting, some of that criteria that I'm looking for. So what I do is I spend the first week of the month. This is why I said the first week of the month is my hardest, is my busiest month of the busiest time of the month. Because in that week, between now and Friday, what I'm doing is I'm going through all these stocks, all 300 of them, okay? All 300, and trying to pick the best of the best, okay? So yes, they meet this criteria of being above it, but then, like, remember what I said, is like now I have to use different tools to kind of chisel it out and see which one is a diamond behind the diamond. Okay, it takes me about a week to go through all that. Once I'm done with that, I'm done for the month. I'm literally done for the month. So with futures, I haven't really tried it on futures because, it's hard to kind of get a plethora of stocks, okay? There's only a handful of stocks that you can use. Now, maybe it's something you can study, all right? I just haven't studied it because I just felt like with stocks, I have over 7,000 stocks that I can pick from, and I would rather have my chance on finding the best of the best and not have to force myself to trade a certain stock because I need to make money, okay? Which is part of what ended up happening to me back then. So somebody asked a question, could you please look at Amazon on your chart? I will do that. I will do that, okay? And if I don't, remind me. Another question, is this works for SPY and IWM index? Absolutely, it does. Actually, that's how I first discovered it, was on the SPY and the IWM, okay? Again, you got to look at the monthly chart, though, all right? Not the weekly, not the daily, all right? Another question, right, futures only if you're right, absolutely. Futures are only a few, so, and what happened was when I was trading, I had to force myself to say, I got to make money. So here's the two big mistakes I made. The first mistake I made was like, oh, I have to make money or else I'm in trouble. Okay, that's a very bad place to be in. And then the second one was, oh, I only had a select few stocks to choose from. So I remember when I was trading futures, I was like, man, I got to make money today or else I'm in trouble. And so I forced myself into getting into some trades that was not prepared to really move and end up losing a lot of money. So I take all that emotions out by looking at stocks, finding the big time frames, and then sit back, let it do what it needs to do. So do you sell short on stocks that cross underneath the 10? Yes, EMA, absolutely, Mick. I absolutely do that. We even have strategies around that will show you, almost 95%, okay, where this stuff happens over and over and over and over again, okay? Very good questions, guys. Next question, Wally, do you ever use 34 EMA on a daily chart to narrow down your list? No, I do not, okay? I do not use the 34 EMA on the daily chart, okay? I use other indicators, but not the moving average when it comes to that. When it comes to the daily chart. But very good question leading into that, Frank. So I start with the big time frame, which is the monthly with the 10 exponential moving average. Then I start looking at the weekly and see which ones is which. Then I go to the daily and say, so the daily to me is really just, okay, is today the day I'm going to enter this trade, or do I need to wait till next week to enter the trade? Okay, because keep in mind, these are monthly charts. So anytime during the month, as long as I get in, that's all that matters. So I'm not necessarily, and that was the other thing too, I could take my time to get into a trade. As opposed to like when I was day trading, now it's like I could not take my time. I had to act real fast, and I got into so many mistakes, okay? But with this, I can take my time. Whether I get in today or whether I get in at the end of the week or whether I get in next month, it's really not a big deal. Because guess what? It doesn't matter what time or what day of the month I got into this stock right here. A year later, I was up, okay? If you want to look at that, it's like a year later, we went from there to this, 64% in a year, okay? 64% in a year, 65% in a year, all right? That to me sounds good. Now, some people are like, oh, 65% in a whole year, that's too long. But trust me, okay? I've done it with options where I jump in, yeah, I made 100% here, but then I have 10 other stocks that was losing money, okay? This one, it takes so much, it's so much easier, consistent money, and this is where I say you just have to be patient, okay? All right, so let me do this. So that's that one. And somebody asked a question about, do you use it to get out of the trade? Absolutely. Look at this, guys. All right, just look at this. We all the way over here. That's 269% that you just made on that trade right there. Okay. Now I'm running out of space. Okay. Let's keep on going to the day it closes below that moving average. Oh my gosh, we're running out of space. Would you like to be in stocks? Can you imagine? Some people's like, man, I bought this stock. If you have a 401k, this is probably like one of the best strategies you can do with your 401k. Okay, finding stocks like this and just checking it once a month. You don't even have to check it every week. It's like once a month is all you need, okay? And let this stock just ride itself out and be part of those that, so right here, this is where we now are getting out, okay? So we got into this stock back here. Was it? Oops. Right there. And even if you got out right there, okay? Even if you got out right there, did you make money or not? Okay? And that's the whole point. Did you make money or not? Because again, I'm not going to come up here. I could come up here and say, oh yeah, you made 444%. There's money management skill sets that I would teach you guys if you become students of ours, where you can get out before it gets all the way down over here. But I'm just trying to show you a very, very simplified way of just being in a stock that is red. So how many people are hoping that this stock is going to reverse and go back up because they've lost so much money because they were the ones that bought up here and now it's down here and hoping it's going to reverse right now? How many people still want to stay in this stock based on what you've already learned so far? No way. Thank you. Thank you. Okay, no way. All right. I have people saying, oh well, it's just going to rebound back. Guess what? It's approaching this support area right here, so it's going to rebound back. And I'm like, I don't care about all that. What is the chart showing me? Okay, and you would have saved yourself from all this. Okay, so it's not until here that I decide I want to get back into this trade. Okay, and then people will be like, oh well, this is the all-time high. Oops, what did I just do? I'm so sorry about that, guys. They'll say, oops, let's do this again. All right, so now they'll say, oh, this is the all-time high. So even if it comes, it's going to come to all-time high, and it's going to come back down again. And I've seen so many people say, hey, we at all-time highs. Shouldn't we be getting out? There's no way this stock can go higher. There's no way this stock can go higher. We're at all-time highs. It's time to get out. It's time to get out. It's time to get out. And I'm saying, what is the chart telling you? Oh, there's just no way. I had one guy say, this market has been at all-time highs, and because, it's kind of like a racehorse who has to go 4 laps and be tired. But now, and each lap represents a year in the market right now. And now this horse is on the 7th lap. It's just bound to come down. I heard people saying this market was going to come crashing down in 2013 when I first started trading. And they said the same thing in 2014. And they said the same thing in 2015. And then when it finally started correcting itself in 2015, people were like, see, I told you since 2008, I was saying that this market was going to go down. And I'm like, okay, yes, you did, but look at what you missed out on because you couldn't follow a simple procedure on the chart. Look at what you missed out on, okay? They missed out on one of the best rallies we've had in years, okay? And this is what I'm talking about is let's follow the chart and tune out all the noise out there, okay? So here's the stock saying now it's time to get back in again, and guess what happened? All right, we're just going to fast forward. It was telling us to get out right there, okay? So here's an example. We got in, we expected to go out, but then boom, it took us out. All right, so you missed out on 3 months, all right? Oh, I think that was the market just closed right there. Look at what you've made all this time, and then you missed out 3 months right here. And here's where the stock is right now, Chipotle, okay? And I've seen so many people since I saw this happen and say, it's time to get out of Chipotle. I've been singing that tune for the very longest time. Get out of Chipotle. It's not time to get into Chipotle. And people are like, but I want to get in. But I want to get in. Oh, it's because of the stuff that happened to them here. And it's because of this and that and this. No. Okay? At the end of the day, if you look at this is the chart. This is literally today on Chipotle. Is there anything on this chart that is saying get into Chipotle right now? So from here on out, there should be nobody asking, is it time to get into Chipotle? None. Okay? Why? Because, again, the chart is not saying it's time to get into Chipotle. Okay? There's nothing on the chart that says it's time to get in Chipotle. Okay? Somebody asked the question, why did you choose the 10 EMA instead of the 9 EMA or the 8 EMA? Not anything in particular. It was just, again, when I was doing my research, I just liked the 10 better, and I just went with it. Okay? All right. So that's a thorough example, and I'm hoping that you guys can see how, again, I'm not picking this bottom over there, and I'm not picking this top over here, but kind of showing you how you would have traded this in real time. Right now is not the time to get into Chipotle. Let me go back to USO. Okay? This friend of mine that was saying that he wanted to get into USO, is there anything in this chart that's telling you to get into USO right now? I don't care what the news channel says and what everybody's saying and what Carl Icahn is saying or anybody, okay, that, you know, oil is ready to go up. I'm like, I'm not trading this stock anytime soon, okay? Why? Nothing on this is saying it's time to get into this trade. Nothing whatsoever, okay? Let's go to the SPX real quickly. Everybody's afraid of a bear market. I'm going to zoom in right here, okay? This was, I believe, what year was this? 1998. I'm not sure what happened right here. So right here it says, hey, you know, it's time to go bearish. You know, say you did that. 2 months later, it's like, oh, no, we changed our mind. We're going back up again. This is what I mean by, like, that fail safe, okay? It's not 100%, okay? But, okay, so yes, say you got in over here. You lost money. You lost money. Guess what? You can go right back in and enjoy that ride all the way up to there, okay? And so many people are afraid of losing, but I'm saying, guys, if you do this the right way, you learn how to do this the right way, you'll be in more winning trades than you'll be in losing trades. The best thing is you don't have to guess whether you're on the right side of the trade or not, okay? And then all of a sudden we see this, and it's like, voila. And I'm saying, hey, get out. Get out of this trade. I don't care whether 2 months later it comes back up again. I'm saying, for now, get out, because guess what? It's telling you out. And if you did that, this is what you would have saved yourself from when we had the market, the bear market of 2000 to 2003. Okay, just look at that. Very simple. There was times when it came really close and all that stuff, but you would have saved yourself from getting into a trade that you were not supposed to get yourself into. And then all of a sudden, April of 2003, it's saying, hey, you might want to get into this trade. Do you know how many people will probably be so nervous to get into this market and say, no, now is not the time to get into this market? Okay, and I'm saying, nope, this is probably the time you want to get into this market. Why? Because the chart says so. Not because I heard somebody say so, not because I read somewhere, not because I was wishing that it would, not because I was praying that it would, not because I was hoping that it would, but because the chart says so. How? Because I see it. I know what I'm looking at, which is, hey, if it closes above the 10 exponential moving average, it's time to like start, you know, getting yourself ready, okay? And what do I expect it to do? I expect it to keep on going higher so that if it doesn't, it tells me something is wrong, take your money, get out, let it reset itself. What ends up happening? 2003 to 2008, we had a tremendous rally in price, okay? When 2008 came around, what happened? It showed you exactly. Oh, look at this. You would have been in this trade. You know how many people, when I first started, would say, man, if only I had got into the market back in 2003, look at all this money I would have made over here. Well, you can do this going forward, okay? Look at this. Now was the time when it says get out. This was 2008 market crash. It says stay away from it, and you would have stayed away from it until July of 2008. Oh, but Wally, you didn't get in at the exact bottom. So what? The point is, you have seen the beginning. Even if I got in July of that year, it would have taken you all the way. You would have got stopped out around here. You would have got stopped out around there. But outside of that, you would have been in this trade for all this period of time until 2015 again. Okay? So now the question becomes, where are we right now? Where are we? Okay? Everybody's been asking me for the last 2 months, are we in a bear market or not? And I'm saying, I don't know if we're in a bear market. I don't believe we are in a bear market. Not that I don't know. I don't believe we're in a bear market. Why? Because we're still above it. Well, what about today? I mean, this is now below it. But you know what? This is just the second day of the month. I wouldn't even consider this at all. Okay? Because we're in day 2. We still have 28 more days before the end of the month comes around. So until the end of the month, everything that you see right here, nothing. Okay? Now, if at the end of the month we stay below here, then I'm going to be saying, hey, we need something to worry about. But for the last 3 months, it's like, no, we're not in a bear market. We are not in a bear market. And everybody had a hard time believing that. Even when I said, you know, in February of 2016, this is when gold started doing this thing. And I say, hey, guys, you want to get into some gold stocks right now. And I was telling people, you want to get into gold stocks, you want to get into gold stocks. And people were like, well, what do you see? What do you see? What do you see? Well, let me show you what I saw. Here's an example of what you saw, okay? Again, we're going right back there. Boom. Once it closed above that, that was your clue that you needed to get in. And as long as it stayed above it, do you know how much money you would have made from here to there, okay? I mean, just look at that, all right? And people were wondering, everybody, gold was a good stock. Gold was a good stock, all right? And now, even though it's reversed, it's still not saying it's time to get out yet, okay? So what I did when that time happened is I took some stocks that were actually cheaper stocks so I can compensate for the lack of options. And I entered stocks like this, IAG, okay, at $2.46, which is probably almost the same amount that you would spend in options, you know, and rallied that sucker 100%. I got out somewhere around here, 90-something%, okay, because the chart and my analysis was saying, hey, get out for now, okay, even though it wasn't bearish, but I'm saying, hey. So do you think I've abandoned gold altogether? No, all right. These stocks are still stocks that could make you some money. Why? Because it's still above the 10 exponential moving average. Other stocks that was like that was this stock right here, okay? All these are like, you know, some people call it penny stocks and they don't want to trade penny stocks. I'm like, you can do whatever you want, okay? We went all the way to like around here, all right? Another 100% return on our money. You can go to, you know, stocks like big name stocks, Yahoo, all right? Same thing. Okay, when I was telling people now's the time to get into Yahoo before the merger and all that kind of stuff, people were wondering why, okay, and you were able to make money off of that. I talked about stocks like Qualcomm, okay, same example. I'm going to change this to a 3-month chart, a 3-year monthly chart. Same thing. Once it closed above that, that was your chance to get into stocks like that. Let's go to Apple. A lot of people were talking about Apple. I was telling people back here in July, August, I said, now's the time to get into Apple. People like, no, Apple has no good products. Apple is dead. Don't do anything with Apple. And I'm saying, yeah, you can say all you want. And then when they did all this stuff right here, people were like, oh, man, I should have been the person that got into Apple back then. Okay, same thing happening right there. Check out this stock right here. All right, this is a stock that I got into, and look at how much this stock has done, and it's still doing that till today. Okay. I mean, just look at those rallies, and this is what I mean by getting into stocks that are ready for explosive moves. Here's another stock, current ones, Yelp, okay? I was telling people, now's the time to get into Yelp. Look, those are like some significant moves in those prices, and it's just the beginning, okay? Here's another stock that did the same thing too, all right? Once it closed above that, look at how these stocks rallied. Again, I'm not making these things up. 293% return. Okay, very simple. I didn't have to spend too much time looking at these stocks. Okay, Netflix, same thing. Oh, you know what? Amazon. Before I forget Amazon, somebody asked me to do Amazon. Before I forget that, let's look at Amazon real quick. All right. So I'm glad that you actually brought that up because we actually look at this together. And I'm almost done, guys. I'm almost done. Come on, Amazon. Did I type in Amazon correctly? Yeah. I don't know why it's not coming up right now. Amazon. Come on, Amazon. There you go. All right. So here's Amazon, okay, and it's still above it, all right. But man, it would be so nice if you got in, you know, right here. Now, this is hindsight trading, of course. So the question becomes, how do we get into this trade now, okay? Because it's still above it, all right. How should we get into this trade, all right? These are the kind of things that we teach. There's a specific way on how to get into trades that are still above it and still going higher. But if anybody was to ask me, oh, is Amazon bearish? I'll say no, it's not. Okay, no, it's not. Is it in a pullback? Yes, it is. But is it bearish? Absolutely not. Okay, and so you have to know how to read the chart. Very, very important. How to read the chart. Okay, and there's ways to tell when it's time to get into this stuff. This is again what I mean by, like, you know, it's just not one indicator. We look at candlesticks. We look at patterns. We look at other indicators that you will learn if you become subscribers of us. Here's a stock right here that somebody was mentioning. Oh, Fitbit. And how did she get into Fitbit? Because everybody's buying Fitbit. And I was like, don't get into it. And I had this lady argue with me. And I said, don't get into it. And I think she was doing this back in April or May. And I said, don't get into Fitbit. It's not time to do. And look at where it is now. Still not anywhere. Okay? How about GoPro? I remember when everybody was talking about GoPro. All right? And I'm saying, not the time to get into this stock yet. Okay? You would have saved yourself from all that trouble. All right? Oh, by the way, I just bought my first Ferrari, okay? I just bought my first Ferrari, and I remember sending out a text message. I said, guys, I bought my Ferrari. And people were like, wow, that's amazing, man. Show me a picture. So I took a snapshot of this and sent it to them. And it's like, man, what the heck is this? All right? Well, this was my first time buying Ferrari, and I'm still in my Ferrari stocks, okay? And this is the reason why. So I didn't buy the car Ferrari. I bought the stocks Ferrari. All right. Okay, so somebody asked a question. Google. Let's look at Google real quick. Let's look at Google real quick, and then we'll start wrapping it up, guys. Google. Here we go, Google. All right. So here's Google. All right. And again, this is a stock that's bullish, not bearish to me. All right. This is a stock that's bullish, not bearish to me. So again, there are things that this chart is showing you that's saying you want to be in Google, not out of Google. All right. And what do you do? And this is all the stuff that I teach. So when we have pullbacks like this, what do you do when it's still telling us it's bullish? Again, the whole thing is this is a bullish stock. Why? Because it's above the 10 exponential moving average. If it's below it, it's a bearish stock. But when it's above it and it's pulling back, there are some things that you can do to kind of like help you trade that profitably. All right. So ladies and gentlemen, I mean, there are so many examples that I can give you. Again, being able to get in at the bottom of this trade going up, rather than guessing, rather than wishing, rather than hoping, you know, are all things that you need to learn, okay? Look at Goldman Sachs, same thing, all right? So I'm just showing you examples after examples of stocks that are showing that they're ready to go up, okay? I'm not making this up. How much time did I have to spend to look at any one of these stocks? Did I have to look at any fundamentals? Did I have to know what was going on in the company and where they were traded and all this kind of stuff? None whatsoever. All I did was look at this stuff and say, this is a stock that looks like it's ready to go up. I want to go ahead and do so. All right. So I'm going to check a few more. Somebody wants me to look at IBM. All right. So here's IBM. All right. So if I was to look at IBM right now, all right, yes, this is this month. I won't do anything with this stock right now because it's still at the beginning of this month, okay? So you want to wait to the end of this month to decide whether or not you're going to enter this trade, all right? So you just have to be patient, okay? But these are all things that you want to look at. All right, ladies and gentlemen, thank you so much I'm running out of time right now. Only literally got 2 more minutes left. Before I leave, let me show you, this is what I'm going to offer you guys. Let me see if I can bring up the screen 1 second. All right. If you go to our website, www.rightsideTrading.com, you can write that down, www.rightsideTrading.com. I just told you guys, you know, this week I'm going through some stocks right now. I've got about 380 something stocks that I'm going through, and by the end of this week, which will be Friday, 2 days from today, I'll have the list of stocks that look ready to go up and the stocks that are looking ready to go down. So for those who want to buy puts, or if you want to like short the stocks that are going to go down, and for those of you guys who want to buy calls or want to buy long stocks, ready for stocks that are in the beginning phases of the market of that stock ready to go up, where a year from now, 2 years from now, everybody be like, oh, you lucky dog, okay? That's kind of like what you want to look at. So I am offering that as special. I typically charge $3.99 for that, okay? But I am offering that. If you go over here where it says monthly stock pick special, okay, what you'll get is for $97, you subscribe to that, I will send you an email of all the stocks. I mean, 100% of them. I don't hold anything back. I show you 100% of the stocks that we have analyzed, that we see that these are stocks that it looks good, that are either ready to go up or not. Now, keep in mind, just because I sent you that, we then do what is called a weekly analysis, okay? And this is where, remember what I said, that we start talking about things that helps us to tell whether we should or should not get into that stock. We do that on a weekly basis just to kind of see, okay, yeah, this stock is still performing, it's still doing what it needs to do, all right? That one is a completely different package because this time I have to show you how I'm doing analysis. You get to watch me how I'm doing these analysis every week and say, okay, yeah, you know, we got into this stock, we can still stay in, or we got into this stock, we should not be getting in. Here's how to place your stops, here's how to do all that stuff. That one is for $3.99. It's a monthly subscription, okay? So once you pay, all right, unless you cancel, it's going to automatically charge you again, all right? It will automatically charge you again every single month. But what you'll get if you sign up for just the $97 is just a list of stocks. I won't tell you which ones to buy, which ones not to buy. I won't tell you anything like that. I'm just saying here's a list of stocks that we see have the potential of making it up, going higher, and here's the stocks that has the potential of going lower, okay, in the beginning phases of going up, beginning phases of going down. You sign up for this one right here, then what you'll get is not only the list, but then every week, okay, you'll get, you know, we'll come back and we record these videos so that even if you miss it, you can go back and watch it, but you'll see the videos where we start talking about, you know, the stocks that are performing better and whether we should stay in, whether we should start looking at the weakness of it, or whether we should get out. Okay, and that's what I can offer to everybody on this call. Okay, Somebody said, are you making any money for living at all? My money is made from trading. Let me just put it this way. I just bought one of the largest businesses in Gainesville, Lake City, Tallahassee area, okay? And I didn't have to go to the bank to do that trade, okay? To buy that business, okay? That money was made because I traded the stock market, okay? Now, before I got into stock market, just real quickly, before I got into stock market, my whole goal was to buy businesses, okay? Because I had a financial background, I understood how to read financial statements. I wanted to buy business, but nobody would give me the money. The banks won't lend me the money. I couldn't find investors to do so. So literally in 2003, that's what made me go into the stock market and say, let me see if I can raise this money by myself, okay? And from that is what I have now used to do the trades that I do right now, okay? And somebody asked a question, what percentages are you winning stocks? I haven't really calculated it, but here's what it is. I have about 68 stocks, okay, in my portfolio. 68 stocks in my portfolio, okay. Most people are like, oh my gosh, how can you manage 68? Okay, out of the 68, there's only 3 stocks that is losing money right now, okay. 3 out of the 68. So I don't know what the percentage is on that. I never calculated the percentage as far as that is concerned, but I'm telling you, okay, when gold was rushing, I was in multiple gold stocks, multiple mining stocks that made, 80, 90, 100% return, 200% returns, okay? I was in stocks that, the beginning phases of Qualcomm getting to rally. I was in the beginning phase of Apple before it started rallying. I was in the beginning phases of Alibaba, when it was beginning to rally, okay? Everybody's now looking back. I wish I was in Alibaba. I wish I was in Apple. I wish I was in Qualcomm. Micron, I was in the beginning phases of Micron, okay? These are all stocks that I was in before anybody even heard about it, okay? Some of them before the mergers even took place, we were already in it, okay? And so it's just what I'm saying, this is what we use. And so again, the money that I use from that is literally, I did not have to go to no banks to buy the business that I just bought. I literally just bought that business in September of this year, so like about almost a month and a half ago, okay? It's been what I've always wanted to do, all right? Somebody asked me the question, well, if you're making so much money from trading, how come you're buying businesses? It's just something I always wanted to do. But the cool thing about it is I did not have to go to any banker, not one banker, to buy this deal, okay? And that was so different from 3 years ago where I was on my knees begging these bankers to lend me money, and they all said no, okay? And exactly, diversification, you're absolutely right, Brandon, okay? Not only, so like even as my business is bringing in money, I plan on putting more money in the stock market. The profits that I take out of that, I plan on using it to also buy real estate as well as more businesses, okay? So my thing is to buy assets, real estate, businesses, and the stock market. It's 3 things, and I'm going to be managing all 3. But I have to tell you, I started with $2,000, lost it all, saved up money, went back to work, got some more money, went back to work, tried to see if I can get more money, lost it again, until I finally came up with this way I started trading, and this was in 2014. And from 2014 to last year, I was able to make enough money to buy this business without ever having to step into a bank, okay? So ladies and gentlemen, you can check it out. Again, you will see, hopefully I've shown you guys, by the examples that I've set right here. There are some stocks that you never want to trade because it will not work for that. Just like, jumper cables, again, is only applied for certain things, okay? Remember that. A screwdriver can only be used for certain things. A hammer can only be used for certain things. So anybody that tells you, okay, this hammer works for everything is not telling you the truth, or this one indicator will solve all your problems is not telling you the truth, guys, okay? And you have to know how to read the charts, okay? In my opinion, you just have to know how to read the charts. How anybody else does it, I have no idea. Okay, so is there any questions before I leave and turn it over to the guys from MarketFest? All right, so I wish you very well. Sign up if you want to learn more. At the very least, you can even at least just get the list of stocks that we have. I'll have that list by the end of Friday. Usually I'll send out the list on Saturday morning, no later than Monday morning of the first or the second trading week. And you would at least see those stocks and say, okay, which stocks, look like they're at the beginning and ready to start going up, okay? And then if you sign up for the other one, then you come in onto the weekly classes where I start teaching you how to tell which ones are good, which ones are bad. All right? All right, ladies and gentlemen, I'm going to go ahead and turn it over. Thank you so much.